Bitcoin is still over $19,000. Even after we've seen a almost a $58 trillion drawdown out of the equity market and the U.S. equity market, and also fixed income in the United States of the market capitalization. So we are still over $19,000. How is that possible? Even after we've had Luna, we've had Celsius, we've had, the dollar skyrocketing to, almost all-time highs, essentially all-time highs in many different currencies, especially the pound, the euro. So with all that said, I'm about to get into why I am still not worried about Bitcoin whatsoever, and I'm going to explain to you how much money the Federal Reserve and other governments around the world are about to be printing, and it's going to spin your head around. All right. But first, please like and subscribe. Check us down below for our CT Club, where you get trade alerts, portfolio updates, and you get to see how we are doing in this bear market, what we are getting into. Okay, so you've had the 10-year almost reach 4%. That's really dangerous because that is the debt market. So if you have an unstable debt market, that's going to rattle everything. That's why you're experiencing the stock market going down like it's been. But what's interesting, you haven't been really seeing Bitcoin going too much lower. It's range bound, even through this unstabilization of the bond market, which is phenomenal. I'm actually really surprised that Bitcoin has held up so much during that time, or during this time. That's phenomenal. That is a really good sign that Bitcoin potentially has bottomed. Okay, you have a lot of people who are like, oh, it's going to go to 10,000, blah blah blah. Okay, hold on a second. So if it's going to hit $10,000, like, we would have to have a complete 20% drawdown in the stock market, easy 20% drawdown if we are going to get Bitcoin to go down to 16, 15, whatever thousand, in my opinion. Maybe I'm wrong, but I'm just seeing a lot of weakness around the world, the global economy especially. We are definitely in a severe recession, potentially a depression. If you look at other factors, it could signal a depression. Okay, so now this is how crazy governments are. I'm going to go over a couple things. So the U.S. Secretary Yellen said yesterday, I don't see any erratic financial market conditions. So this is how out of touch these people are. She really said she doesn't see anything erratic in these markets. Really, have you not seen the 10-year? Gosh, you're the unstable bond market, which is the debt market. Holy cow. So you know what's happening there. What's happening right now is the debt market's rising, but guess why it keeps stopping? Why it's not at 4% right now? It would have been at 4%, but the Federal Reserve is injecting liquidity in there, so that what they're doing is they're printing a bunch of currency, then they're throwing it into the debt market, right? And then that's keeping the debt market lower. So, but this is the law of diminishing returns. So the more they do this, the more they have to pump more capital each and every time, okay? And it gets less and less of an effect, okay, on the bond market. This is how it works, and this is why it's so dangerous. But here's the thing, people are like, oh, they're on quantitative tightening. That's what the Federal Reserve says. But you know what they're doing? They're printing so much more currency than they've ever printed before, and they're injecting it into the bond market. That's a great excuse to do that. Plus, what else are they going to do? What else are they going to do? They're going to put even more mortgage-backed securities on the balance sheet. They are. I showed you a couple days ago that the Federal Reserve is not decreasing their mortgage-backed securities like so many smart people on Twitter say. No, they're not. And they are going to continue purchasing it, especially when you have the 30-year mortgage rates. A year ago, 30-year mortgage rates were around 3%. Just 2 weeks ago, the average 30-year mortgage rate in the U.S. hit 6%. It's now above 7%, you know? So all these people are going to probably lose their homes, and guess who's going to buy up their homes? Sir, government. Yeah, you remember that whole thing of the World Economic Forum where you own nothing and you'll be happy? This is straight in line with that, okay? Because if the government keeps the prices high of houses, well, they own the houses, right? Boom. And they printed a lot more currency in the meantime. So, lastly, I'm going to cover this. This is crazy. But people thought I was a conspiracy theorist when I said the US government, the Federal Reserve, is buying their own bonds. Well, now you have the Bank of England will temporarily begin purchases of long-dated UK government bonds in order to restore orderly market conditions. Okay, they said that these will be carried out on whatever scale necessary to soothe markets. Okay, so that means so much currency printing all around the world. They are all in unison. All these central banks work together to go ahead and print, print, and print. They cannot stop printing because they have a debt-based system. So their currencies, every currency in the world is debt-based. It feeds off debt. If you stop feeding it debt, it dies. So this is what's happening right now around the world. And just be really prepared for a ton of inflation. Be prepared for Bitcoin to be volatile, but also skyrocket once this thing lets loose. So I expect Bitcoin to do really well in the future. Probably go much higher than we could have ever expected because of the amount of currency printing that is going on right now. Well, anyways, that's all I have. Please like and subscribe, and I will talk to you soon. Bye.